Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. Oh boy, what a market, eh? Up and down like a horse drawers, as they say. And unfortunately, we're just not through the window here for me to start feeling comfortable again. We're now at the 20th of March. And we probably got a couple more weeks of this craziness ahead of us. I was a bit cautionary with our audience on the daily brief today in that I've seen this game played before. Um, Ironically enough, most people like think of crisis situations and we've never seen this before. This time it's different. Ironically enough, man, it's actually the way that the stock market is acting is actually incredibly cliche. So I caution everybody about getting too bullish too quickly here. You have to let the dust settle, and you just have to wait for those darn W's to come in. Um, you never know where the hell the damn W is going to come in, but if you want some sort of assurance that you're trading with the trend, which is usually easier than trading against the trend, sometimes it's best for us just to cool our jets, let the dust settle, let the market set up trading range, break out of the trading range, W, rinse and repeat, away we go. So I've been sort of talking recently that my enthusiasm for the stock market is substantially curtailed. It's fun to watch. Some of these names are popping up and down, and it just sort of like what it coulda, shouldas. But I trade a trading plan. I trade setups, and if the setup fails, I just have to walk away, and I'll just wait for the next opportunity. So with that said, when we look at the deck, you're not going to see many W's here. So that should be a message unto itself. Unfortunately, I don't know whether anybody's going to. On to the story. So, first and foremost, U.S. dollar index. Interesting. We had a gentleman who watched these free YouTube videos a while ago, and he said he had point and figure targets above these highs, and I was sort of left scratching my head. Why the hell did the U.S. dollar break down? And then it turns out the U.S. dollar didn't really break down. It was a big flush out, and woo, back up we go. I don't have a trade in this, and when we get into these kind of V bottoms and tops, market states, I just got to let things settle down. I think I've talked to you recently about the Canadian dollars just getting taken apart here. And commodity currencies in general. That's a leading indicator for that space. It should be a further testament to the fact that really I don't think it's in our best interest to be commodity bulls going forward. Which of course is going to drive all the gold bugs and stuff crazy, but I have to stick to what I've done over the past 30 years. I remember through the dot-com blow up, people kept calling me as a broker. When do we buy Nortel? When do we buy Nortel? It's come down. It's 50% off its peak. It's 75% off its peak. It's 80% off its peak. It's 90% off the peak. And it's gone. I mean, I'm not saying that gold's going, but, when it comes to growth assets, that can easily happen if they just don't have any earnings. They're not growing. Commodity, what we have to think about is cost of production. Still think the general cost of production right now for an ounce of gold is around $1,000. So if you're going to go buy gold and you're going to think that, all right, it's value, it's a safe haven, you have to understand that, from the producer's perspective, this still has about a $400 or $500 premium over their cost. I make the argument Bitcoin, ironically enough, is actually probably the one asset in the marketplace that's actually relatively close to the cost of production. The question here is it here now at 6,500? Nah. We said that back in 2019 that our calculations suggested the cost to mine a Bitcoin was about $3,000. I do like the idea that once we get beyond the halvening, that number will translate into 6,000. So, interesting if you can see dumps down into $3,000-$4,000 area. Hell, if we can get a dump down below 3,000, awesome. I love dollar cost averaging on assets that are trading at or below cost of production. That just makes me super, super happy. So, looking at the broader market, we've been talking recently about how the higher ups have kind of identified a na level. And now we have to see how the market acts around this pivot point. And what I sort of said to start off the broadcast, I've seen this before. What usually happens is stock markets break. Oh my God, we're all going to go out of business. American capitalism's over. Give us a big bailout so we can keep going on. And remember, we employ a lot of people, so those are the jobs that you're saving. But at the same time, too, I do believe that there is a growing sentiment within our society that's like, fuck you. I mean, you stupid executives, you set the whole damn system up to line your own pockets. And now, because you run your company really shittily and not paid down your debt, not thought about your workers, blah, 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 you want a bailout now? So I don't know whether we've actually hit a floor here. What I think ends up happening here over the weekend is all the politicians in the House of Representatives that's going to have to approve this bailout. They're going to go to their constituents, and their constituents probably meeting at church and stuff over the weekend. Maybe we have church from home now. I don't know. They're going to be like, screw you, man. This is gaining traction. And so what usually happens in these scenarios is the first passage of the bill actually gets rejected. And then the market, of course, is going to freak out, put in like a panic faceplant dump, and then they go scrambling back. Okay, we'll do it. All right, fine. So that's actually how I'm expecting this to play out. And of course, poor old Kavarkanator here, everybody give him, keep your fingers crossed, wish him luck. He might be quarantined in the state of California here indefinitely. The United States of America now is going into lockdown mode. It's pretty scary, I'll tell you. And then also, too, in the face of these capitalists going to Washington and asking for a big bailout, it turns out the politicians that are going to be voting for these bailouts, Republicans, they're just as crooked as the fucking capitalists. So how is this going to play on Meet the Press and, at church meetings and stuff like that over the weekend? You want to see the face of evil in our society, there it is. Oh, boy. I'm going to get myself into trouble over that. But, man, this story all around this family and stuff and the way they've finessed the system, and then now technically this is basically trading on insider information. That's technically illegal. But anyway, don't get me started on that. I spent about a 10-15 minute rant in the Daily Brief about how I'm absolutely so disappointed in our society. Oh, well, it is what it is. So, I don't know whether it's in our best interest to call a bottom in these markets. And, full disclosure, Canada's gotten absolutely destroyed here. I am a dollar cost averager for my retirement plans, things like that. Try to buy value. That hot investment, wow, was that ever a disaster? Thank heavens I didn't put too much money into that. I'm not really in a big hurry to do anything on any of these investments for my RSP, so I'm not going to panic dump. That doesn't make any sense because I can't claim the capital loss. But, I am watching Canada closely here. I did hear some ramblings out of the oil people that the Russians and the Americans and the Saudis are going to get together to try and solve this oil problem. That'll be interesting. So, yes, we've got dead cat bounces, and we'll talk basically about dead cat bounces you're seeing in Bitcoin, same sort of thing. But, whether it be Canada or whether it be the United States, we, in my opinion, we're very, very far away from any kind of W's here at all. You can try and knife catch in here. I'm not gonna. A lot of my capital is just sitting in cash right now, just doing nothing. Bond market seems to have caught a bit of a bid. Have they caught a bit of a bid because they're sort of sniffing wind to the fact that maybe Congress is not going to pass this bailout package on first blush? Wouldn't surprise me. Also, too, given the fact that, hell, even stocks in the States are down on the day, we might see a bit of flight to quality there. That's sort of the whole premise that stocks and bonds should be uncorrelated assets. And then finally our gold. Gold's tried desperately over the past few days to put in some sort of bottom and rally here, and I was feeling pretty optimistic. But what I can see here, it seems to me, you notice things are pretty weak, and it's interesting, our Europeans, they finished their business day at 8:30 my time. And TRI CTO Sjord and I, we trade a Dutch futures product through the New York opening range, kind of a fun trading plan that we're running on the site for demonstration purposes right now. And he even said, "I'm not going to be long heading into the weekend. What are you, crazy?" So tons and tons of just get me out. Maybe play the bounce, and if you could clip the market for a couple bucks, awesome. But I'm hearing a lot of people are saying I'm squaring up and getting the hell out heading into the weekend. Specifically with regard to the corn, it was really nice to see, as I've sort of said before, it was great to see where was the money coming in, what got the market's attention when we actually started to see some sort of little bit of buying come in, and Bitcoin caught a huge bid here through this event. I still like this AB equals CD thinking. I teach in our education programs 38.2 fib levels are a great sort of dead cat bounce level. Is this still a bear? Beg your pardon. If it is still a bear market, we should reject off of 38.2 and start aiming out and working our way lower. If, however, this is now turned into a trading range, and really that means acceptance above 38.2, then probably we're going to start talking things like reload zones on the upside. But that's down the road. That's not today. I think, also too, we talk lots about 50% rules. I think that was a serious stab up into 50%. On the sort of open here this morning, but notice I like to follow this 13 EMA very closely, and you notice that 13 EMA basically sucked price back down into that level. So very dangerous area here, and actually through the daily brief today we even saw there's some like 4-hour bear divs and double tops coming in. So at the lower time frames, actually we have some people who are starting to hunt shorts now, go figure. The way that I look at this right now in particular is I'm thinking now is when we ought to get our reload zone tests of these lows, right? Wicks and tails like to be eaten. You can see these juicy tails down in here. There's 13 EMAs. They all did their job admirably, stopped the bull in its tracks. And really now the question is, do we go and top out? You can see big old shooting star there on Ethereum right into that. Actually, maybe why don't we put that there? Right into that 13 EMA. Also, too, really cool that if we do actually accept this double bottom is the bottom and we move higher, notice that is off of a massive higher time frame, 78.6. So the irony of it all is actually that's pretty business as usual if we do accept back above here and take off. But it's still way too early for me to be thinking about that. The good part about this kind of market for crypto audience is, we trade through the weekend. I think all the big indexes and stocks and stuff, like I said, you're going to see out of like the futures people and all that kind of stuff. You're going to see a bunch of... What the hell is the damn chart? I hate when I do this. I can't find the chart I was talking off of. I guess it was this one. You talk a lot about position squaring and just sort of, I want to be flat heading into the weekend. Good part about crypto, of course, is it's 24/7. So, we had on one of our site OGs, Colin, and actually he's going to sort of do a action-packed play-by-play, minute-by-minute sort of video hangouts through the weekend. So we can sort of be abreast of names that are double bottoming and popping and stuff. So we'll see how this goes. Like I said, some of these names are popping violently, like this storage just took off overnight. But, a lot of scared people. You imagine there's a bunch of trap bulls up here, wicks and, candle bodies as trade location. I don't necessarily like the idea of shorting altcoins down in here, but it doesn't surprise me against these previous highs. We've backed off. And also, too, I think I got off a double on that Nimmerite yesterday. I think I have the name correct. I'm not quite sure. I posted it out. Where the heck are you? Here it is. Into a double level, and I had to be really patient and wait for this level to be hit. So that was 24.80. Great to see. Higher time frame. That's a bigger honk and massive, like maybe like monthly W6. Delicious. But up here, do we really want to be a buyer of these kind of assets? And I noticed that he's kind of backing off a little bit here too today. Might even paint an inside bar and then work his way back down. And of course, this was subject to a pump group. We all know that story. So, you can see I've got my mana. I finally got my fills. God damn it, took me forever. So maybe I'll spend the weekend going and shopping for real estate in Decentraland. I don't know. So, just sort of finish off this thought for the weekend. If you are trading these ideas, you better be light on your toes. You can see that these rallies evaporate very quickly. So I like when I see W's. It shows me that there's, some support. Somebody said, hey, I'm a buyer here. And I love it when they break out on momentum. But, yeah, I mean, you could just buy and hold this shit. That's fine by me. Nanny nibbles kind of stuff. But if you are, quote-unquote, trading this stuff, just be light on your toes. Understand the broader market context. We haven't really bottomed in the risk-on assets. So, don't fall in love with any of this stuff. All right, I hope that helps. As I said, I'm going to be watching these candle body lows very closely. I don't think our transition window is still another couple weeks down the road here, guys. I am thinking back and forth. I had that little squiggly line theory kind of thinking. So I'm getting the impression that maybe we're going to do something along these lines. You never know what the hell is going to happen in this world. But, as sort of a reference, that's sort of what I'm thinking right now. All right, everybody. Have yourselves a great weekend. We'll try and do a nice PMA session, broiler chickens on Sunday. Message probably isn't going to be a hell of a lot different, but you never know. Maybe something exciting happens between now and then. Have yourselves a great day. Remember what's your number one job. Actually, why don't we do that in the comments? Let's see, anybody watching these videos, what is your number one job as a trader? Believe it or not, a lot of times it keeps me out of a lot of trouble. I mean, you saw what happened in the stock market there a month or two ago. I went and bought a whole bunch of W's and they all got blasted out. So just remember what your number one job as a trader is to do, and make sure that you can come back and play the game again tomorrow. All right, everybody. Have yourselves a great day. All the best, and bye for now.